Boots is going to work. Hey, this is Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Some of you have probably seen Boots before. She's a black lab guide dog that we've had since February of last year. She's 18 months now, and she's gotten called back for her final training. And tomorrow's the day. So she's going to head back over to Long Island and get her training. She's scheduled to be helping someone who's blind, but that could change. So I just wanted to say thank you for all your help over the last 16 months. I love you, girl. On to the key market stats. So we have 3,977 houses active on the market versus 3,779 last week. That's 198 up, so that's great news. 505 new listings over the last 24 hours. So we are seeing a nice bump after the pause last week. We'll see if that continues. Hopefully we can get up over 4,000 and continue to build some inventory. This is good news for buyers because they're actually starting to get a little bit more of a selection versus having one house and that's it. Go for it, and there's multiple offers already. I wouldn't call this the inventory problem solved, but it certainly it is an improvement. We had 2611 houses close in April. We're at 3,138 for May, so we definitely blew that number out in the May closings. We do expect to see some more. It's early in the month, and usually it takes a little time for all the closings to get recorded. Just remember that houses that were closed in May actually went under contract in March or April. So there is a little bit of a lag. And I do expect to see the next couple months of closings maybe a little bit lower because interest rates have popped so much. Based on May sales, we're at 1.26 months of inventory, so it still is a really low inventory position. So some key dates. Mortgage rates have spiked again over 7%. Almost 7.2 was the top. So there's a lot going on right now. The debt ceiling debacle seems to be kicked down the road based on the bill that's at the president's desk right now. We're just waiting to have that signed. Mortgage rates have eased a little bit recently because from those 7.7% highs. I'm sure there is a stabilizing effect of this temporary deal on the debt ceiling, but there are other factors in play. Recent inflation reports have shown that inflation is pretty sticky. It's still staying around. Fed members, they seem to be in two different camps as to what they want to do. There's one camp that says, June meeting, we're doing another quarter point raise. The other camp seems to be saying, let's wait for a minute, take a pause, but at some point in the future, we're probably going to have to do a quarter point raise. So the bottom line that I'm getting out of that is there's a quarter point raise coming. I just don't know when it's going to be. I'm not sure if this is good news or bad news, but the Fed is going to see several key reports leading up to and during their meeting in a couple of weeks. The jobs report, it comes out next week. If it's strong, if it's showing an increase in jobs greater than what was expected, then that might induce the Fed to do that increase in June. And that seems like it might be like a little bit odd, a little bit off, right? The jobs report is strong. Isn't that a good thing? Well, it is for jobs. It is for people that are trying to make a living and, put a shelter over their head and food on the table. But from a look at the economy, if the jobs market is stronger than expected, that means the economy is stronger than is expected and tends to drive inflation up. The Fed, the only thing they can do is push the economy down, which will then drive demand down, and therefore inflation will start to come down. The following week, the CPI and the PPI reports come out. Those reports actually hit on the 13th and 14th, respectively, during the Fed meeting. So let's hope they bring some positive news. Talking about the primary mortgage market survey, we're at 6.79% versus 6.57% last week. As I mentioned earlier, rates have been up over 7% heading into the long weekend, and they're down now around 6.85%. So they have eased off a little bit. I do expect to see rates continue to stay in this high 6s to low 7s range until at least the jobs report next week. If that comes out weak, and then maybe things will slow down a little bit here. The next 2 weeks of data and then the outcome of the Fed meeting could impact the mortgage rates, but the real key here is to see inflation consistently down around that target 2% that the Fed is looking for. The last couple of reports, inflation's been two times as much or more. So let's hope that that does come to pass and we can start seeing some interest rates start to ease off here. That's what I have for today. Comments, questions are always welcome. Have a great weekend.